Going over the auto insurance rates tab for the S7.5 correlation and regression. Really quick in going over this, one of the things I wanted to show you, this is actually real data from an insurance company, and they actually have 22 columns of determinants on how they determine an auto insurance monthly premium rate. And I broke that down to 7, and then we're going to go over 4 of those. But one of the first things I had to do is, and we did this for you, is we had education, employment status, gender, and marital status, not as numerical values, but as text values. So the first thing we had to do was take education and give it some type of numerical value. And in this case, we have high school or below, we have some college, a bachelor's degree, a master's degree, and further down, there's doctorate degree. So we had to give it some type of value. So on high school or below, we gave it a value of 5. On some college, we gave it a value of 4. So here's a value of 4. On a bachelor's degree, 3, a master's degree, 2, and down below, we'll see a doctorate degree at 1. Then on employment status, we had unemployed or employed. So if you're fully employed, it was a 1. Anything else was a 0 in this case. We could have added medical leave and disabled, but in this case, we just decided to give it as a 1 as employed, a 0 as unemployed. Gender, either male or female. So a female we gave a 1, a male we gave a 0. And a marital status as married is 1, and single or divorced, anything but married, was a 0. And we did that because in running regression and those things, these all need to be numerical value. So it's not any more difficult doing this than what we just did. So don't let the number of columns or amount of data sometimes scare you. So over here, it says for this assignment, we formatted it so that you gave numerical values to marital status, gender. It says run a regression as a monthly premium as our Y. So our monthly auto premium, what we're trying to figure out, is our Y. And then we wanted income, marital status, gender, all of these as our X inputs. So let me go ahead and hit data over here and data analysis. And hit regression. And so the first thing, if there's anything in here, go ahead and delete those. And we want to keep labels on, and we want to include our labels. Our Y range is our M3 all the way down to Shift Command down M8633. Our Y ranges, and we can go back up here to the top. Go back up to the top. Our Y is income. So hit Shift, income, marital status, gender, employment status, education, month since last claim, and month since policy inception. And Shift Command down. So we're going from F3 to L, 8633. We want our labels, and we're going to click OK. Now it gave us a new sheet, and I'm just going to copy this information and put it back on the other sheet. Command C, and go back to my auto insurance rates. And I'm going to go back to the top because it's at the bottom. And you'll see that I built this other table right here, and I'll show you that here in a second. And I'll do Command V. Now, just for aesthetic, just for reasons, I'm going to go in here and I'm going to take all of these down to 4 decimal points because it's just easier to read. Okay. And then I'll go down here to my intercept income status, and I'll take that to 4 decimal points, again, to easier to read. So we can look at our multiple R, which is our correlation. It's 0.95, so very highly correlated. We can determine the rate, 91% of the rate, or 91% of the time is based off of this, or the rate is 91% of it is based off of this regression over here. And so we're going to start with our intercept. Our intercept is our base insurance rate, and we see that income only affects it by very little, a negative 0.0001. So the higher your income, the lower your rate, but it's very little effect. We see that marital status has a big effect, like a negative $15. Gender has an effect, employment status, education status, and month since our last claims. So let's go in and fill out this information here. Our correlation just equals our multiple R. There's our correlation. Our R squared equals our R squared here. Okay. Inception, our intercept, which is our minimum fixed base rate. That's, and I'll make this a little bit bigger. That's this number right here. So we're going to do equals, and this $56.34 is actually what it is, and we'll take that and make that an accounting number, just because it's a rate we're looking at cost. And it says write the equation, but only use marital status, gender, employment status, and education as your slopes, along with the intercept. So this would be y, okay, or our rate equals, and you could write it any way, our marital status times its slope. And our marital status slope, we can come down here, is this -15. Okay, and you can't put that in there, so our times its slope, so times -15, it's actually 70 if we round it up, or if we keep it the same. And then that's added to, I just wanted us to do this, our gender times its slope, which is 1.0786, plus, okay, our employment status. We can just do ES for employment status, times its slope, and we have to look down here, it's -5.22272, so times -5.2722, and then that's added to, again, it says education, so it asks us for education, edu times its rate, which is 3.14 pi. I didn't design it that way, that's just interesting, it became pi. And then we add that to, our base rate of $56.34. So that is our equation right there. That is determining, using those factors, determining what our insurance rates should be. So I built this out here, and you could do this too. So marital status, it's asking right here, using the equation above, what is a monthly auto premium for a single female who's employed and has a doctorate degree? So marital status on single, I'll come back over here, we can figure out what single is. So on single, right here under gender, we gave it a 1. So marital status is a 1. Okay. The slope of my marital status is right here. We have that right here. So we just do equals right there. Okay. And I'll do that for each of these. The slope of my gender equals, I'll just add that right there. Return slope of my employment rate equals employment status right there. Slope of my education equals, come down here to education 3.14, and then my intercept base rate equals the 56. And just take that out there. Okay. And I have an extra blue, and I can get rid of that later. Okay. So my gender, it says female, so now I'll come back over here and look up gender on male, female. So female, I'll come up here to make sure I got it right. So female gender is a 1. So there's a 1 right there. Employment status is employed, if you are employed. So there we have employed is a 1. Okay. And then education, and this is a doctorate degree. So single female who's employed and has a doctorate degree. And you might have to scroll down and find doctorate somewhere in here. I know what it is. It's a 1 because we start at 54321. So we can look up their degree. Sorry, come over here, find doctorate. You can also do a find button. But there's a doctorate right there. And if we come over here, we see that the employment status or on that as a 1 also. So let me go back up just so you can see this right here. So education is a 1. Okay, and then we have our base intercept. And I'm going to go ahead and turn all of these into accounting, because all of this is based off of dollars. So each of these are accounting. I don't change the slope. Okay. And these are the things that I can change. So my premium, so using the equation that we just built, so what is the monthly automobile premium for a single female who's employed and has a doctorate degree? So this equals, and single is my marital status right there, multiplied by the slope of my marital status. And then add that to the gender times the slope of the gender. And then add that to my employment status times the slope of the employment status. And then add that to my education times the slope of the education. And then we add that to our intercept or base rate. And now click enter. And we see that using the equation above, a single, oops, and I did marital status wrong on single. Okay, and I know I did this because single, okay, right here, if you're single, your marital status is 0. Married is a 1, single is a 0. So let me change this. So sorry, apologize. Marital status is 0. Return. And we see that their premium is $55.28. So if you're married, you would have got a $15 deduction. Okay. Women versus men is a $1 difference. Employment status, depending on if you were unemployed, your premium actually would go up. So your employment status is employed. So employed, yep. Unemployed is a 0. So employed, you get $5 off. Unemployed, you get nothing off. Okay, it's what that says. And then your higher education, the less amount. Okay, so this is using the equation above. What is the monthly automobile premium? Now let's look at the quiz questions for this. The first quiz question on this one is, what is the correlation? So here's the correlation. We figured out the correlation. The next quiz question on that is, what is the base rate? And the base rate is the $56.34. And I didn't ask you a quiz question. I did. So what is a single female employed with a doctorate degree? And that's what we figured up right here. Single female employed with a doctorate degree. And there's our equation. Okay. So hopefully this helps, and now you can see how you can put together, because if we actually changed, let's take all of this and just copy it down one as a thing. Now it automatically put some stuff in here, but let's say they are married, okay, and this automatically came down here, so that we'll delete that, and we'll delete that because by copying it down, it tried to copy all the way down to the next line. But I'm going to bring the $15.70 down. I'll bring the $1.08 down. I'll bring the $5.27 down, and the $3.14 and the inception. Now let's take a look at if they were married. Okay, we don't have a 0 gender, but married. Let's say male. Employment status is they were unemployed. Okay. And they had some high school education, okay, and then slope of education. What I did wrong here is I needed to lock these cells, so actually let me go up there and lock those. So when I copy them down, it copies the same. Same here. Let me lock that cell. and copy it down so we get the right equation. So you can see even your professor is not perfect. Let me lock that cell, Command T or function F4, and bring that equation down. And the slope of education, Command T, because it's trying to copy from where it was originally pointing to, and we got to change that. Okay. And Command T, so when we moved it down, just like before. So now we can see that marital status is a married. Okay, so we notice that if they weren't married, if this person wasn't married, we would see that it jumped up $72. So this is a married man, okay, who is unemployed, okay, who has an education of 5, okay. So that jumped up right there. If they were unmarried, if they were single, it would have been a 72. So a single male, a lot more cost than a married person. All right, so hopefully this helped and that you did well, but this is allowing us to actually forecast. And you can even see your professors make mistakes too, but we can recover from it. All right, very good. Thank you very much, and hopefully this helps.